Hello, everybody, and welcome to Confident Compounding with Corey Kramer. Today, we're going to be reviewing Decker's Outdoor Stock, ticker DECK. I had quite a few requests for this one over the weekend and on Friday. Recording this on Monday, October 27th, because Decker's fell about 15% on Friday after they reported earnings. And this was one of our buys back in April of this year, which was about even on the year until this, and now it's down about 15%. So pretty much all happened on Friday. Market didn't like the earnings report, and so it sold off. So if we look at, so as always, this is not individual investing advice, just how I analyze stocks. I also have a free tier over on Patreon where I post a lot of these requests. So check that link out down in the description. And I have weekly picks over there as well for $25 a month, where I share whatever I think the best value in the market is each week. And if I don't already own it, I buy it myself. So check those links out down in the description. I posted the returns from the weekly picks at the beginning of this month, the end of last quarter. So I try to do that quarterly. I don't show you guys what the picks are on the public channel, but I try to show the results, and they've been really good so far. People like that. All right, so Decker's, shoemaker, known for Uggs, known for Hoka shoes. I want to say maybe Tevas as well. So they have a lot of good brands. They have a really good history, especially the past, say, 10 years or so, 10 to 15 years of bringing new brands to market, having them become popular. But we've had some pressure, mostly due to tariff fears, and the fact that they were just coming off a really high valuation here for what is probably a somewhat cyclical business or finicky, fashion-oriented business with a 35 PE. So the stock is down about 60% now. I'm guessing in my last video, I probably talked about this as a potential level to add $87 since that's 60% off the high. Probably added when it was about 50% off the high before. So I do have a position in this one. And the question is there's two different questions. One is, if you don't own any Deckers, is now a good time to buy it? That seems to be where most of the questions are coming from. And then the other is, if you already own it, should you add to it? And so my short answer for that, based on what I actually do, which is what my channel is really mostly about, is I haven't added. I still have my original position. I haven't added to mine yet, but I might. I've just been a little bit hesitant because I do own Adidas still. I took some profits when it was near its peak, but I still have half that position, and I do have on holdings as well. So I have quite a bit of shoe exposure already, and they have had a bit of a boom here. So, and we know the stock price has. So the question is, let's assume that these earnings come in like it could even be negative in the next couple years. It just depends on a lot of factors, but it's probably going to be a little tough the next year or so, I think, for most of these companies, because they have to, no matter how the tariffs turn out, it's going to be kind of a pain in the butt. So there's going to be an adjustment period, I think, to kind of figure out how to deal with the tariffs and the supply chain stuff. At the same time, I think there's economic weakness among a lot of the consumers right now. And so when you put that together, it creates a lot of uncertainty, I would say. And I don't feel like this is one that's going to run away too quickly. I think it's going to take a little while to shake out. So I'm a little more patient for all those factors about not adding quite yet. Now, if it got down to, and we can look at the historical price, right? So if we revert back to pre-pandemic, we're looking at $33 a share. That's still more than 50% decline. That's another 60% decline from here. Now, granted, that's a big decline. Back to the trough in 2022 is about $40 a share. So that's about a 50% decline. So, and then the peak here is about 73 or something like that. Okay. Maybe that's some sort of technical bottom from the 2021 peak. So, but they're all a little bit lower than here. And with already having the other shoe exposure, I'm just being a little bit patient. That's not to say I might not wake up one morning, especially if we get some sort of sign of bottom kind of forming. But right now, the stock is still essentially in free fall. And I don't see maybe a China deal or something could help, but I don't see too many big catalysts kind of coming along to that you need to worry about totally missing it. And I won't totally miss it because I already own some. So that's adding to my patience. But I do think if a person doesn't own any, taking a small position here is perfectly reasonable. Even if they just stabilize earnings here for a couple years, it's priced at a 13 something PE ratio, basically priced for very little growth, and from this point going forward. And I think if we have, a couple things need to happen. They have to maintain their brand's popularity, which is another aspect that's kind of who knows. You're not going to get necessarily an opportunity to buy really good brands when they're super cheap when things are going well. So you have to kind of assume that they'll find ways to turn things around, to market better, to have other brands pick up. You have to place your faith kind of in management and just the way that things work, that they'll come back around in a couple years, right? And I don't think those things are super predictable at this point in time. But they have a great track record. So if we go back even farther, right, this is Fast Graphs isn't going to be all funky with me here. But if you go back, they were trading at like $2 a share. I wish I could figure out how to reset. Oh, there, I did it. Holy cow. Like $2 a share, and now it's like it's thousands of percent you would have made. Let's see if it works this time, now that I reset it. So even after the 60% sell-off, yeah, you have almost a 20% CAGR for 20 years. It's hard to beat. It's hard to do much better than that. So that like businesses don't usually do that for that long in this difficult of an industry without having some fundamental things going right there that people are getting right. So the real question is, when does... Oh, it magically came back. That's so strange. I don't know why. It's got to be some kind of glitch. I can just keep drawing pictures with it. It's got to be some kind of reason for them not to kind of be able to sustain and come back at some point. It's just the question is, how long is that going to take, and where is the bottom going to ultimately form? So I do think some sort of bottom will ultimately form. I would definitely think it will be probably, you could use the 2020 low, like $17 a share, but that seems a little overdone to me. I think even during like a bad recession, it probably doesn't get below 20-ish, right? So at some point, there's going to be a bottom that forms. We've also had a lot of inflation during this time, so it's unlikely earnings are going to fall off horribly unless some other brands become super popular and theirs are just forgotten about, which can happen. But as long as you have like a diversified portfolio, it's not going to hurt you too much. So yeah, relative to the rest of the market, I think it's fine to take a small position here and just see what happens and be patient. Not something I would make a giant bet on when it's in free fall. We don't have any sort of I don't know. There's a lot of questions, which is why the stock's falling. So it's not something I would place a big bet in, but definitely relative to a lot of the other opportunities that are out there, if these guys can get their marketing together and get the supply chains figured out after tariffs and everything, it could do just fine, and you're paying a very reasonable price for it. So I think the business risk is pretty low. For a fashion retail business. So yeah, I think those are my thoughts. I think, yeah, it's worth buying a little bit of it and just kind of holding it for the next several years and see what happens. So thanks for asking about this one. If you found it useful, hit the like and subscribe button, and I'll see everybody later.